Welcome to my channel today. This is a King's Tutor. The first time of joining us, thank you for clicking to this. Okay, now I want to say a question on double taxation. Okay, in taxation, I want to say a question on that. In the other video, we're going to see it from scratch and treat it in details. Okay, now let's see this question on double taxation. And the question said, Kidney Brothers Nigerian PLC is a manufacturer of pharmaceutical products and household utensils. It has been operating businesses in Nigeria for some years with an agency in Kenya where its product is patronized. Full stop. The trading results, which was based on the business operations. Now, I want to see the trading result. Now, turnover for Kenya 12 million, Nigeria 21 million, the total 13 million, other incomes 500,000, Nigeria 1.2 million, total 1.7 million. Now, everything sum up. It's a less cost of sales. You have the value there. Now we also have less expenses. Also have rent for Kenya 515,000, Nigeria 1,518,000. We have consultancy services, legal services, depreciation, bad debt written off, entertainment and traveling expenses, property rates, foreign exchange loss provision. For Kenya, it's 900,000. For Nigeria, it's dash. Sales commission, repairs and renewals, other general expenses, and we have the net profit given. For Kenya, 756,000. Nigeria, 910,000, and the total is 1,666,000. Now, other information. The first one said the capital allowances for the years agreed by the Inland Revenue were Lagos, initial capital allowance 152,000, annual 98,000. Kenya, initial there was no initial allowance, and annual is 460,000. Now we now said the second one, the company had paid to Kenya tax authorities the sum of 250,000 as tax on the income derived from Kenya. The third one, foreign exchange loss provision arose as a result of fluctuations in converted cash balance resident in Kenya currency in a bank in Kenya. Required, compute the tax liability of the company on the total profit of the taxpayer, bearing in mind double taxation relief. So they're asking us to compute the tax liability of the company on the total profit of the taxpayer, bearing in mind double taxation relief. Okay, so we're going to prepare this now, considering in mind the double taxation relief. Okay, so the first thing we're going to do here now to prepare this, I'm going to write here the name of the owners, which is Kidney Brothers Nigeria PLC. PLC or Limited. Okay, so in this now the question said we should compute their tax liability and bear in mind the double taxation relief. Okay, so we're going to do that now. Now the first thing we're going to do is to write computation of tax liability for the year. Computation of tax liability for the year. Now, there are two ways to prepare this. Now, the first one is you can prepare for Nigeria to see the tax liability to get the adjusted profit. Okay, to get the adjusted profit and also get the computation of tax to be paid. And you can also prepare for Kenya separately. Okay, or you can prepare them together the same way the question was that we have in columnar form. Okay, so one of the ways is now we can have so we have for Kenya and we have for Nigeria and the total. Okay, so now if you notice that when it comes to taxation, the profits to be taxable as a taxable profit, it is not the same as our net profit because there are some non-allowable expenses that was deducted to get a net profit that should be added back. Okay, so now we're going to start from the net profit we got from the question. So it will now be the net profit. The net profit. Now the net profit from the question there is for Kenya, 756,000. For Nigeria, it's 910,000. Then the total is 1,666,000. Okay, so there are some expenses that was deducted to derive the net profit. Okay, that should be added back. Okay, they are not what allowable. So we're going to add back. So add back. So one of the things we're going to add back is depreciation. So depreciation for Kenya, it is 600,000. For Nigeria, it is 1,800,000. Okay. Now if you now add 1.8 plus 600,000 will give us 2.4 million. Okay. Now that is depreciation. Now if we check also in the expenses that was deducted in a question. Now one of the questions to one of the expenses to get to add back was the foreign exchange loss provision. So we're gonna add foreign exchange loss. Okay, for Kenya it is 990,000, and there is none for Nigeria. So the total will give you 990,000. Okay, so that is that. So if you check, there are no other expenses that will be added back. So we're gonna add up this. So 756,000 plus 600,000 plus 990 will give us 2,346,000. Okay. Now 910,000 plus 1.8 million will give us 2,710,000. Why? 1,666,000 plus 2,400,000 plus 990,000 will give us 556,000. Okay. So now we call this the adjusted profit. The adjusted profit. Okay. That is the adjusted profit. So we're going to less also the capital allowance. The allowable expenses, the capital allowance. So we're going to less capital allowance. Now, if you check the question, you're going to see the capital allowance that was given. Now, for Lagos, which is Nigeria, we said the initial is 152,000, the annual is 98,000. Okay, the annual is 98,000. So if we add them together, 152 plus 98, it will give us 250,000. That is for Nigeria. So it will give us 250,000. Now, why for Kenya? It is there, no initial, just annual, which is 460,000. So if we add them together, it will give us 710,000. Okay, remember this is reduction. So this minus this will not give us the total profit. Now this is 1,886,000, and this is 2,460,000, and this is 346,000. Okay, so we'll call this the total profit. Okay, so here now let's now compute the income tax to be paid. So say the income tax payable by this Nigerian firm. So the income tax payable now will not be 30%, because the corporate tax for companies 30% times total income, which is 4,346,000. So that is 4,346,000. Okay, so 30% on this will give us 1,303,800. So that's the income tax payable. 30% on this total will give us this. Now this is what they ought to pay. but they say bear in mind the double taxation what relief. Okay, so we're going to say less double taxation, less double taxation relief. Now, what will not be the double taxation relief? Now, let's get back to the question. Okay, so they said in the question there, the company had paid to Kenya tax authorities the sum of 250,000 on tax as tax on the income derived from Kenya. That is the income that was derived from Kenya. They've already paid to tax on it, 250,000 tax. Okay, so we're going to see the relief that we pay because the income is coming from Kenya to Nigeria. Okay, so a relief is supposed to be, because if it is being taxed again, the normal taxation, that is when we're calling it what, double taxation. But a relief is supposed to be made. Now, there are procedures for this relief. Okay, so we're going to do an adjustment on that to know the taxation relief that will be paid. Now, there are two conditions that we're going to take into cognizance. Now, let's see the adjustment. So, we want to calculate the relief rate, to know the relief rate. Okay, now the first one, the Nigerian rate. The Nigerian rate is, of course, we know it as 30%. Okay, 30% Nigerian rate. But half of this is called the half Nigerian rate. So half of 30 is what? 15%. Okay, now the second one we're going to see is the Commonwealth rate. Is the Commonwealth rate. Now, how do we get this Commonwealth rate? It has a formula. Okay, now the formula is foreign tax paid total foreign profit times 100/1. Okay, so this is how we can get the Commonwealth rate. Foreign tax paid over total foreign profit times 100/1. So now, foreign tax paid. In the question, remember, they said they've already paid 250,000. So they've paid 250,000 from the income that is derived from Kenya, which is 250,000 divided by total foreign profit. Now, what is the foreign profit here? That's the profit made in Kenya, which is 1,886,000. Now, that is the essence of preparing that for Kenya, so that we know this. Okay, so we're going to get 1,886,000 times 100/1. So if we use our calculator, 250,000 times 6 divided by this will give us 13.3%. Okay, 13.3%. Now, there are two conditions on the relief rates to use. Now, the first one is, now we said if the Commonwealth rate is less than equal to the half Nigerian rate, then we said the relief that we're going to use will not be the Commonwealth rate. Okay, will not be the Commonwealth rate. What it means is that if this Commonwealth rate is less than or is equal to half of Nigerian rate, which is 15%, the relief will not be based on the Commonwealth rate. Okay, why the other one is said if the Commonwealth rate is greater than half Nigerian rate, now the relief will be half Nigerian rate. Okay, so now we're going to base on the two conditions now. Now, if you check here, this is a Commonwealth rate, which is 13.3%. Okay, 13.3%. All right, this is Nigerian rate. So 13.3 is less than 15. So, which is the first one? If the Commonwealth rate is less than equal to half of Nigerian rate, then the relief will be on the Commonwealth rate. So it means that is 13.3% is less than the half Nigerian rate, is less than 15%. Now, therefore, our relief would be what? 13.3%. 13.3%. Okay, so we're going to calculate now what will not be the relief they will remove for them. Now, the relief will not be 13.3% times the total profit. the foreign income, the income that came from there. Okay, that's what we're concerned on. The income that came from there is 1,886,000. So 13.3% times 1,886,000 will give us 250,838. 250,838. So this is what will now be the relief. Now there's a condition. Now note this, that the maximum relief that should be granted should not exceed the foreign tax that have already been paid. The maximum relief that should be granted should not exceed the foreign tax that is already paid. Now, this is a relief. The maximum of this should not exceed the foreign tax that have been paid. So the foreign tax that have been paid already is 250,000, which is this. Why the relief from what we calculated is 250,838. So the maximum relief should not exceed the foreign tax paid. Therefore, since it exceeded it, it is that foreign tax paid, the actual amount that was paid, that is now the relief, which is 250,000. Okay, so that is that. So I'll say therefore the relief is equal to 250,000 because this is greater than the 250,000, the tax that has already been paid. Okay, so now when I say the double taxation relief is 250,000, now this is the essence of, we can put this as note 1. This is the essence why we did all this, to know the relief, what they will reduce for him. Remember, this is what he is supposed to pay, but because there is an income, remember this is the total money. They want to tax 30%, but inside this total money, there is a money that he has already paid tax for, which is the income that came from Kenya. So this income that came from Kenya, he has already paid tax before in Kenya, which is 250,000. Okay, so what we're trying to say is there should be a relief because they have a treaty. Okay, there should be a relief on the amount that came from Kenya. So that relief we are saying should not exceed the tax that he has already paid, which is what 250,000 after doing all this. Okay, so when I say the taxation relief, that means they will not charge this 250,000 again because he has paid that. So it will now be 1,303,800 minus 250,000. Now this will give us 1,053,800. Now this is now the tax liability. 1,053,800 is now the tax liability. And in some question, we can also get the education tax, okay, which is 2% of the adjusted profit. Okay, not on the total profit, or on the adjusted profit, will pay the education tax. Okay, so 2% on the adjusted profit should give us 1,120. So that is the education tax. But the main essence of the question is the tax liability, which is this. Was supposed to be this. There's a relief given because income was derived from another country, which has already been tax has already been paid on that income. Because there's a Commonwealth treaty between Kenya and Nigeria, we did that. Okay, now just comment where you're watching me from, and also if you want me to prepare the other method we can use to prepare same question like this, but I prefer this because you're doing this simultaneously, okay, and it's understandable. So if you want me to prepare the other method, just comment in the comment section below. The King's Tutor prepare the other method of preparing this, and we do that. Ensure you subscribe to this channel, like, comment, and share to other accounting lovers. Okay, thank you very much.